Hello, Warriors. How's everyone doing today? Hi, Patrick. Waiting for your name, 600. Good morning to you. Whatever time zone you're in, everyone. Let's have a great day today. What do you say? All right, number one rule doesn't have anything to do with trading, but everyone out there who still has a mother, I want you to start listening to her and do everything she says. Give me a Y if you agree to do it. Everyone gonna listen to Mom? I know it's not Mother's Day yet. Good for you, Marius. All right. Amanda told me mums, you know, British mums, M-U-M, know best. So I'm not saying you have to consult with her about where to place your stops, more about macro issues. Anyway, talking about macro, see, I have my own segues. Dan Norberg tweeted this chart to me. It's the Aussie Daily. And I know a lot of people have been cleaning up with Aussie, just being short Aussie, with risk off and commodities being under pressure. I just want to give you a little bit of food for thought here about milking it. And Dan's saying that if we close under 76, 76.30, you have a major breakdown. That coincides confluence with Alba, who was here with us about a week or so. Alba Puero at Albit Mix on Twitter. So time, I believe, to be cautious being short. You almost see a little 1, 2, 3. And let's look at my stuff here that I wanted to show you guys. We're almost 78.6 back here as well. And because of this, people have been cleaning up on Euro Aussie. I'd start to be careful, as I'd be careful with shorts down here. I would start to be pretty cautious and going to the door on Euro Aussie as well. Here we are. Okay, we're making new highs up here. Some of the shorter term stuff, not ideal divergence. Maybe there's going to be another pop. We're already about 80 pips off the high. But glaring divergence on the 4-hour. So I'm not saying it's going to collapse, but we could see 160 again. And this is just like the Aussie's been one heck of a move to the downside. Euro Aussie has been one hell of a move to the upside. So you don't have to agree with me, but I just wanted to go over that with you. Be careful being short Aussie. I'm not telling you have to buy the thing, although I do think that there'll be a tradable low here. And this could be it right here on the 4-hour. Okay. Everyone with me? Give me a Y if you see what I'm talking about. The glaring divergence here, maybe this is 1, 2, 3. We're almost 78.6 back. I'd say you're chasing a market after a 78.6 retracement. I'm not saying we're going to new highs, but why can't we rally back to 78, 78.5? But also, you know, if you're looking for the breakdown, you're better off hoping I'm right for a rally in Aussie to do it rather than in the hole. Okay? So Euro, I still think has some upside here. I still think we're going to make new highs. It's starting to shape up. Yesterday's pullback was, you know, right to support. Identified it between 4 and 3.5. Looks like it's setting up here to surge one more time. Still think we're going to make new highs for the move here. That means cleaning out highs here, which was 25.58. I think Rega was talking 26. Corn was talking a trend line at 27.10. So I still think that that's going to be accomplished. That'll be negated on closes. You'll know under 23.50 if we close will be your first danger warning sign that there's another trip to the downside. Give me a Y if you're with me. So I'd prefer to see it just complete and get over with. So we could start probing for longs in the dollar index down here. You know, this could be a 3 drive setting up down here. Here's your daily. It'll come in under 88. So looking for one more push to clean out the dollar bulls one more time. And the bigger picture, really, when you look at it, could be a big falling wedge on the weekly, right? So we're going to attack this wedge line. Okay. And the implication of a wedge is that we're going to see one more, we're going to take out the high of the wedge. And a real macro look, and I think that still agrees with what Grega was talking about long term. Check out this horizontal line here. Okay, so we're playing with it in a range with it. This was a pretty nice ascending triangle breakout that we're testing down here. And if you do the measured move, the move from here was a low of, call it 70, 70, 89, 62. So call it 1900 points, right? 1900 points from say 88 is 107. And I believe that's a long-term target of Grega. So it's all starting to come together here, that there could be, and even if it's not 107, it'll be some kind of fib retracement. I believe, in my humble best guess, Dale Pinkert opinion, that we should at least get a rally back to 94 or so. So I think the next big trade is the dollar to the long side. I don't know what the catalyst is. I could only guess. Maybe with the North Korean leader going to China, they worked something out. And I would say if Trump came home with a peace deal to denuclearize the Korean Peninsula in May or June, that would be a pretty good victory, even if they don't stick to it. You know, and I don't believe any deal they sign they'll stick to, but that happens with a lot of countries. So I'm thinking that might be a news event with everything that's happening with him taking his train, leaving the country for the first time. Probably, if he's going to do it, he wants to have China's assurances that they'll back him if we renege or anyone tries to take out this regime. So just a little political cloakery, and I think it would be great, you know, and I think that would be, you know, that could happen with maybe the markets making one more high. I'm torn here with the S&Ps. You know, what a great short, what a great long. Now it looks like it's coming, we're making higher lows. Is it going to continue? Well, you know what? Someone that I respect pretty highly when the NASDAQ was up here was talking about 6,500 in the NASDAQ and then 74. And this looks like pretty good divergence to me. We made new lows with Facebook and every popular tech name, NVIDIA, everything got killed yesterday. So we're diverging and following through. Of course, we have to do something right on a weekly basis, and right now the weekly looks terrible, but it's only Wednesday. So we'll see about that. One reason I think it's possible is because the pattern to me in NASDAQ is incomplete. So maybe we get one more push into May, June, into a Korean deal, and we get a third drive up towards 7,400. But I'll tell you what, under yesterday's lows, you got to get out of the way because we're going to wash out. Okay, so I really think the next 48 hours or so, or through the end of the week, is critical that we hold yesterday's lows in all the indices. You guys with me? You change into a triangle? Okay, Jacques. See, you're more diligent than me. Target still 126. See how informed our face community is? You know, congratulations to you guys for using every bit of information you get in our analysis. You guys have more energy than me. You probably young bucks. I think Blake wants to have a session on Friday. He's going to interview a friend of his. You're off Friday and Monday. Okay. Friday, the U.S. is closed. Okay. So Blake, how are you today, buddy?
I'm doing all right. We're just, you know, there's a lot of very critical areas being pushed right now ahead of month end. A lot of people are attributing these moves to the month end flows that are coming through.
Yeah.
And so there's a lot of, like I said, there's a lot of critical levels being tested right now. And so we've got to, you know, watch them pretty carefully. The biggest one out there is going to be the dollar yen, and the dollar yen is getting close to signaling a pretty big reversal here. Let me grab.
Yeah, I think you know, down there at that 3 drive level, and you know what's interesting, Blake? I talked about 105.90. That's the other thing I was going to show. That was a close 2 weeks ago. So, you know, something I was going to teach, I'll do it tomorrow, remind me, but I just look at the closes 2 weeks prior to this week, and at times the market will react to those numbers, and it was, I think, 105.92, which was yesterday's high. And so a close on Friday above 592 would be a 2-week reversal to the upside.
Yeah.
Happen.
Right, and the thing about this dollar yen is it looks pretty bullish right now. This should be really good for risk appetite too, as long as we can hold here. But you can see we're screaming higher right into well, this I would consider this resistance. This is right into channel resistance here. And it's going to be interesting to see if we can hold this this downtrend line. This is the trend line here, and if we can't, I mean, if we continue higher, I mean, this would be a pretty bullish event for the crap.
Hey Blake, when you have okay, go ahead. But when you have a chance, maybe you could show the longer term wedge it broke down from. Or is that baseline the same one and we're above it now?
Hold on, man. I gotta do something.
Go ahead, I'll talk.
Please do.
Okay. All right, so I want to just check something out. So with Blake, he's got some things to do here. So I'll take the screen back. Or if Steve is here, you want to take over, Steve? Or are you on vacation?
I'm here. I've got to manage something real quick.
Okay, buddy. I'm going to take this screen back.
Okay, please do. I'm still here. I have my mic on, so.
Okay. Okay. So Blake was talking about the yen, and that was something I talked about Monday. So Monday I talked about this formation, the 3 drive formation, and this is what I was talking about. It's a little, you know, simple, but you know, at times powerful little thing to have. All you do is like, here's this week, and you count back 2 weeks, and you look for where did it close? 105.95, right? Okay, so yesterday I tweeted about taking profits, and the high was 105.90. So those off numbers really come into play. And now we're going to get a weekly reversal because we're going to close above that, although it's only Wednesday. But it looks pretty good. Maybe the big trend breakdown. Yeah, I know that Steve and Blake had a very long-term trend that we got a breakdown. I think it was up around 109.
Yeah, it's all the way at 109. I mean, we can realistically still make our way back up to 108 and still be bearish. I mean, but
that's what I'm thinking.
there's a lot of room between here, you know, 106 to 108. There's plenty of, you know, plenty of room to the upside if it really wants to, you know, continue to rally.
So that's what I was getting at. It could still be bad with the rally all the way back up there, 109. Long term. Okay, it could just be a correction.
Yeah, exactly. This could be a correction. I mean, if you look at equities, once again, the S&P is holding the 200-day moving average. We came down to the 200-day moving average, and we came down the 200-day moving average again yesterday. And it was an aggressive sell-off late in the day yesterday, but
sure was.
Yeah, I mean, you know, obviously markets, you know, regained its composure a little bit. A lot of this has to do with, you know, the technology stocks have been, you know, under some pressure as well. So,
okay.
Yeah. So, so anyway, but watching this dollar yen, I mean, this is really, you know, I would say the 106 level is going to be really key. You know, if we continue to hold above 106. And we can close above 106. I mean, there's a good chance that we're going, you know, as you can see right there. Yeah, probably 107, maybe even as high as 108. I think is possible.
Yeah.
So,
well, that would build the case for, you would think, a continued recovery, that perhaps indexes are putting in lows here, and they're going to rally with the yen. I don't know how far, but you know, at the same time, when the yen was weak all the way down for months, I kept using that as an excuse to short S&Ps. And, you know, it took a long time for it to reach a tipping point. So maybe the market even ignores the yen rally and doesn't rally much. You know what I mean?
Yeah.
Anyway, those are my thoughts. What do you think of Aussie down here?
I love the Aussie, and actually I bought it this morning at 72.
Okay. Why don't you take the screen back?
I will. Let me see here. Well, let me
handle your issue.
Huh? Yeah.
Okay.
Yeah, I do. All right. So, you know, here's the dollar yen. Just kind of look again. This is this lower trend line. One of the things that you have to, you know, other than just looking at, and I'm going to get to the Aussie here in a second. One of the things that you got to look at, not just the yen, because it's easy to get mesmerized into the yen and go, oh, you know, hey, you know, this is the trade here. Oh, I'm sorry, I got to do one more thing. Just stand by.
So right, Space was aware of that. We talked about it Monday. Anyone do okay and buy the yen down there early in the week, or at least the scalp? Just curious.
So Dale, one of the things that you got to be a little careful of with the yen, though, in particular, is you got to pay attention to bonds. The bond market. If you look at the 10-year, okay, this is the 10-year. All right.
Right.
Bonds are rallying now. They may be coming off right here, right at this moment in time. You can see this 4-hour chart's coming down a little bit. But if bonds continue to rally, yields are coming down. And if yields come down, then that tends to have a negative effect on the dollar yen. Now, it hasn't this morning.
It's been so disconnected, though, Blake. I mean, the yen's been going down, and yields up until recently have been going up.
Well, yes, yeah, it has been, but that also could mean that if yields actually start to go down, that could really have a negative effect on the dollar yen. We haven't seen it yet this morning. We haven't seen it reconnect, but it could, and that's a risk. So that's a risk if you're long dollar yen and bonds, you know, really start to rally, yields come down. That could, you know, really. What's the word I'm looking for? It could really start to push the dollar yen lower. It's possible.
Would cap the rally.
It could. It really could. And so that's something that, you know, especially if we go into a risk off. Now, the stock market obviously is very well bid this morning. And I'll go back and talk to you guys about that, and then I'll go into the Aussie. But you can see here's the S&P, and the S&P, you know, we came right back down to the 200-day. Let me remove some of these lines here. So we came right back down to the 200-day yesterday. Hold on again. Okay, so we came right back down to the 200-day yesterday, and obviously we're bouncing this morning. And as I wrote in last night's analysis, hey, as long as we are holding the, sorry, I'm trying to consider trading here, so. Okay, as long as we can continue to hold this 200-day moving average, then, you know, the risk could be for a bounce. But if we break the 200-day moving average, that's when things for me really start to change. That's when I really start to look at the market and say, you know, it's not, you know, that we break below the 200-day moving average, and everything changes for me as far as my outlook on what I think things are going to do. Let's take a look at the Aussie, because we were talking about the Aussie earlier. So if you have the Aussie dollar, you notice the Aussie is right on channel support here, and the Aussie has really got a nice bid here, and I think the Aussie, as you pointed out with the Euro Aussie too. Hold on, really quick. I'm sorry, Dale. I'm trying to trade here, and things are like moving. So. Okay. Hey, Steve, are you here?
I'm absolutely here, mate.
I'm gonna have you take over, dude. I'm sorry. I gotta get trading. Sorry.
Absolutely, mate.
Right.
You know, that's what makes you special as well, right? You're not just teaching.
Yep. Gotta
You're
go.
actually trading the markets. Okay, mate.
Thanks, guys. Bye-bye.
Okay. As you understand, market is moving. Blake has to do his stuff. Okay. We have quite a few things to talk about today. Obviously, I'm going to start by having a look at the index, but it's not going to be the S&P for now. It's actually going to be, because, you know, there's a lot of discussion about the yen and the USD yen's rebound. So let's have a look at the Nikkei first, because I want to show here that the Nikkei started a very nice rebound a couple of days ago. Yesterday, it actually failed. Today, we're pushing higher again, but I think that, you know, there's a trend line here that we need to pay attention to. It's this trend line that actually starts from the middle of 2016 at the low, the corrective low, because this was clearly, very, very clearly, a correction to an impulse. That was the impulse in the Nikkei, and that was the correction, right? So we found that low there, and since then, we have had this trend line, which we actually broke down from last week. So we also had, you know, another confluence of supports here, which was this trend line that you see over there, and we're now coming back to retest that confluence of these trend lines. So, you know, I'm going to say once again that I would be a little bit cautious here, because we actually might fail from retesting that area as a resistance. So now going back to the USD yen, we're obviously seeing a very nice rebound from here. You know, I was viewing this as a triangle, but it might have been a channel, but still I have to say that, you know, we have the ability to rebound quite further from here, as I said yesterday as well, but that would definitely not turn the USD yen bullish unless we break above this ascending trend line once again. So can the yen suffer somewhat, meaning the USD yen getting bid in the following sessions, and you know, equivalently the Nikkei? Yeah, absolutely. But does that mean that we have to turn bullish? I think that it's extremely premature to do so. Okay. And that's something we have to make very, very clear here. So yeah, obviously we have some signs of risk on, and some signs of the yen finally seeing some weakness, and we do know that the market had turned overly bullish the yen, not the USD yen, the yen. So there is the potential for some kind of a squeeze, but I think that medium to long term, that actually yet hasn't changed anything. Okay. Now, having to do with the SPX, as Blake mentioned earlier, very critical support area was more or less retested yesterday. We're holding once again, but does that mean that we have to turn bullish? Depends. Meaning, if you're a short-term trader, and you would like this kind of trading, there is no question that there is an appealing reward to risk ratio, because you know exactly where your risk is here, for an attempt, for example, to see a rebound, let's say, towards this zone, right? As you see, the reward to risk is at least 2 to 1, 3 to 1 here. Now, on the other hand, do we have any sign that this is going to be a triangle, which, if you remember, I talked about two possible interpretations even when we were back here. I said one is a triangle and the other one is an ABC. Okay. And we don't know yet which of the two is gonna manifest. So regardless, there is an appealing risk reward if you want to trade it in the short term to the upside. I'm not doing it. I'm just saying that if this is your kind of trading, but keep in mind that if we actually close on a daily basis below the 200 DMA and this trend line, I do believe that we're headed to at least 2480. So meaning that you should still remain very cautious, because there is still a good chance that risk has more more downside to produce. In essence, risk off might resume for at least a few more days. Okay, doesn't mean that it can't pause for a day or a couple of days, but it is what it is. I mean, we currently have two possible interpretations. We're near the lows that will invalidate one of the two interpretations. So if you knowingly want to do something based on that, that's absolutely fine. Now, let me go through the majors very briefly. That there is absolutely nothing that yesterday's sell-off has changed in the Euro USD or in the cable. So that concludes this conversation quite fast. I mean, we saw some sell-offs. I mean, during the last half of the day yesterday, we actually, especially the pound, reclaimed like half of its intraday losses. But regardless, nothing has changed, meaning that the cable, both the cable and the fiber, the Euro USD that is, remain bullish as long as they trade above, very specific areas. For the cable, we've said plenty of times that it's 136, but I think that somebody can actually make this now a little bit tighter, in the sense I would be watching this channel's resistance that has turned support as support once again. It's currently roughly almost at 138, so that's the area we'll be watching for support if we see some movement to the downside. Having to do with the Euro USD, I think the last low that we had at 120.150, you can take that as a tradable low for the time being. Now, having to do with the Aussie and the Kiwi, nothing has changed since yesterday. The Aussie actually, probed lower levels today, but we had said since days ago that 76.40 is the critical support area. So as long as we remain above 0.7640, I would be quite cautious, meaning, you don't want to be selling near important support, right? Because then where's your risk? So I'm not saying that the Aussie cannot move to the downside, but being very, very close to a very, very critical area, I think that you're either already short, so you're already in profit, in which case I would just make sure I would protect at least part of my profits, or in my opinion, you're not doing anything. Or if you want to play it counter trend, you know where your risk is, and if you want to go long, you know exactly what you're risking. So it depends on what you want to do. Personally, I think that we still don't have much evidence of what these pairs want to do here, and I say these pairs because we also have the example of the Kiwi, which you know, the more we fail to break below this 7180 area, the more it makes me feel like this is consolidated formation that wants to resume to the upside, but I don't have evidence yet. I'm watching this area here. As long as we remain below it, I cannot exclude the possibility of a push below there, but I have to say that the longer we spend in here, the higher the chances of a resumption higher, actually. So, you know, monitor this formation, and I think that soon we're going to get some kind of a signal. Now it depends on what it's going to be and its association with, you know, with whatever else is moving. I'm going to make a decision to do or to not do something about it, to act or not. Now let's have a look at the USD CAD to more or less conclude the majors having to do with the US dollar. Yesterday, I actually booked profits on the rest of my USD CAD short. There was short from 139.40, one meaning 139.4. You know, I didn't like the fact that we didn't have any follow through, and anyhow, I kept viewing this potential as a corrective move lower, and you know, seeing it stall just above 128, and seeing you know, the dollar being a mixed bag, and you know, being stuck in a range. I actually wanted to get rid of it. I don't see follow through. I would want to see faster follow through if it was to break below 128. Of course, it's gonna, you know, we need time to see if it's the right decision, but regardless, you know, I call it a good trade and I move on. I would still continue claiming the same thing, meaning as long as we remain above 128, you should be careful. I see, you know, quite the likelihood of a push higher towards 133. But, you know, we can't be sure about it. Yesterday, we also talked about the potential of a head and shoulders formation with 128 being the neckline. That can manifest as well. But personally, you know, as I said, above 128, I maintain a slightly bullish bias for one more push to the upside. Now, USD NOK rebounding quite nicely today, but remains within a triangle. Of course, I would like to see it break to the downside. Triangles anyhow tend to do that. But, you know, we're going to find out soon. Keep in mind that it's also testing once again the 200 DMA. Keep in mind that 200 DMA has acted as a resistance multiple times while we were creating this triangle. So let's see if it actually does that once again. If we actually do break above this triangle, I would be looking perhaps for even a move up to the 61.8, like there, before lower. So then I would consider the possibility, you know, of another move that will go higher than this previous high at 805, perhaps towards 812, 825, before rolling over once again. As I said, this is not an easy market to trade in the very short term, and one of the main reasons that's the case is because we still don't have concrete evidence of you know, what risk assets want to do, if they want to keep consolidating or if they want to move once again lower from here. And the dollar is exactly in the middle of a consolidation near the lows, right? And this consolidation has a very high chance of breaking to the downside eventually, but until that happens, nobody can say that, you know, there isn't the potential of more choppy horizontal trading. And, you know, as long as risk and the dollar are, you know, in a situation that, you know, you are quite uncertain of how they progress from here, obviously, you know, you have the two major elements that move the markets being in, you know, in a key point, you know, having to do with decision making. I think that you know, that means that you should be a little bit cautious in you know, taking positions in assessing how the market is functioning at the moment, and more being an observer until we actually get a more clear direction of where things are moving to. Okay, so let's have a look at a few questions and see if we get some inspiration from there. Actually, yeah, let me go through the metals first, and then I'm going to go through this. Okay, gold. We said that we got this very nice rejection from here, and we're almost back in the middle of the range. Now, keep this in mind, and I said it quite earlier as well. As long as we're holding this triangle, you know, my gut feeling tells me that this market wants to move to the upside. Simply because this is some kind of a consolidation. It's quite broad, which I don't like. I would have liked, I mean, I would have felt even better for a resumption higher if this was a tighter consolidation. But regardless, it is a consolidation. This is, you know, absolutely certainly a triangle. So I would like to see a push to the upside, but you know, I can't tell you that it's a prudent idea to be buying in the middle of the triangle or anything else. So you know, I'm going to be watching likely this area around here, like 13.25, 13.30. If I see some nice reaction and the push to the upside, you know, I'm going to feel good about it. I think that the daily close above, the next time we have a daily close above 1350, or if we get a daily close above the recent high, it's going to be a very good signal that this market wants to move to the upside towards 1400. And you know, I'm actually probably going to be trading this if it happens. Until then, I'm just monitoring. Same thing applies with silver. You know, another rejection from, we have a triangle here as well. We had a horizontal resistance area. So nothing much has changed with metals, but I have to tell you that I don't think that this period, it's already a long period that they've been trading water. I mean, doing more or less nothing. I think that you know, this is soon going to be over. I don't know how soon, but you know, my feeling tells me that we're going to get some kind of breakouts here, and you know, it's probably, you know, after such a long period of them coiling, I think that once we get a breakout, we should see like some very good, some very healthy follow-throughs. So I think, you know, it's going to be a good opportunity participating in these moves once we see them manifest, and that's why I'm very carefully and very closely paying attention to them. Okay, let's go through questions. Let me take them from the start. Yes, that can be the case. The trades that want to make you throw up can be the best. Yes, they can be the best. Get changed to a triangle on the euro. Okay, doesn't really matter because it's still a consolidation, no matter what kind of a consolidation it is. So, you know, either it's a bull flag, or you want to view it as a triangle. Right, here is a triangle. Doesn't really matter because both formations are continuation formations.
But isn't one terminal formation and one's a continuation formation? Terminal thrust out of a triangle.
Both of them can prove to be formations that will produce a terminal thrust, Dale.
Okay, but a bull flag that comes in wave 2 or 3, you know, this is more indicative of a final move than a flag is, don't you think?
Yeah, but the question is the following. Let's say that we continue higher from here, right? Let's assume that.
Okay.
Who can argue that this isn't a bull flag and it's a triangle conclusively? I mean, aren't both interpretations from a technical perspective valid here? Isn't this a triangle?
Yeah,
it is.
I'm just saying that one has an
Isn't this a bull flag? It is. Yeah, I agree with you. That's why, you know, regardless of what's the case, if you want to see it from an Elliott wave perspective, because you know, in Elliott waves we find triangles in wave 4s, and that's your point, and you're right about it. I'm going to answer to you that, you know, you already have done, if you're going through the Elliott wave perspective, you already have done some wave counts. So in essence, you know that if this is a wave 4, irrespectively of how you want to name it, correct?
Yeah.
And yes, there is the potential that the thrust higher from here is going to be a terminal thrust towards 127, 128, definitely at least at 126, 61.8 of the move lower. But, until we see, since this is a very well-established uptrend, until we see like a big reversal signal, it always pays staying with the trend, right? And I think that there is no person that can argue that the trend has not been to the upside since 15 months ago, right? And that's all that matters at the moment. So we should keep looking higher until we get solid evidence that that's not the correct direction anymore. And definitely, that's something we haven't yet seen. High ZAR interest rates is due today. Looking at USD ZAR, it seems like it can move like you suggested with USD NOK. Let's have a look at it. USD ZAR, one of the nicest pairs, has produced some very nice clean moves. Okay, listen, there is a little bit of a potential of a bounce if we actually hold this line, but yeah, unquestionably, there are several other interpretations as well. For example, you can just ignore this because we should always look in the direction of the trend, as I was just saying. So, this could have just been a pennant, right? There it is. There you go. Lower. Now, is there any question that the trend? I do notice these RSI divergence though, so I'm these will definitely produce some follow through, and it did. And this might have been a pennant that's already complete, and we might push lower. Anyhow, I'm viewing this objective, this 161.8 at 1090, as a very appealing objective for a move to the downside to find some support before rebounding, in a stronger fashion. So you have to remain bearish until you get some kind of a proof that something has changed here. And for the time being, it hasn't. Simply seeing some RSI divergence is not enough of an indication to turn bullish something or bearish something. Okay, so I have to say that, keep looking lower until we get evidence that something else is here that we don't have for the time being. Both EUR/SEK and USD SEK are breaking higher. EUR/SEK from cap and handle, and USD SEK breaking trend line from December 2016. At what point would you consider trading it from a good risk reward standpoint? First of all, USD SEK is one of the pairs that I have been showing in the chat room last week almost every single day. And this, I haven't touched actually this chart since last week. So first of all, you can see here that I agree with you, meaning that at least in the short term, we are seeing a break higher from what was a bull flag here. So I like USD SEK for a move towards 852. At least this high. So, with momentum, 852 seems like an achievable target in my eyes. So that's all I have to say about the USD SEK. Now, EUR/SEK. There's the formation you talked about, the cap and handle formation. We came down. We didn't, unfortunately, retest the breakout area because that would have been, a lovely opportunity to go long. And yes, it looks great. And it looks great for multiple reasons. One is that this is a well-established trend since 2012, summer of 2012. So the EUR/SEK has been moving higher during almost the last 6 years, right? Now, there is a lot to be said about if this whole move higher is going to end up being corrective to this move lower, but regardless, we've been either moving higher or consolidating during the past 6 years. So you have to keep respecting the upside. And I think that 61.8 of this move lower at 1040 is probably target we're going to be seeing quite soon. Now, on the other hand, I would say be a little bit careful here because, we have some glaring RSI divergence. So, that doesn't mean that we're going to move straight up there, but definitely, as long as we remain above 10, you have absolutely no reason to be looking lower. So I agree with you on that as well. What about crude oil? Let's have a look at crude oil. Okay, crude actually retested the highs and it's moving lower. I mean, it moved lower yesterday. I have to say that, somebody can start already talking about a double top here, but I'm still looking for a new high. That doesn't mean it's going to happen, but I still have no evidence that I shouldn't be looking for a new high, just to be clear, right? So 2 days of a sell-off are not going to change my mind about it. I would be looking for 64 to provide support, perhaps. If that doesn't work, I would be looking for 62.30 to 62.50 for another move to the upside, because I would want to see like 69. Okay, so nothing really has changed because we sold off for a couple of days. I would want to see a very, very deep pullback at some point, but ideally I would want to see it from new highs, as I said. And I don't think we still have any evidence that this is a double top. Okay. Okay, we have questions about the pound Aussie, the pound yen, the euro Aussie. Let's have a look at all of them. So let me start by the pound yen. We had a look at it yesterday. Okay, nothing much has changed here, meaning I'm not convinced that this channel move higher is anything but a corrective move higher. So I would still be looking for this rebound to fail, unless I see some type of an acceleration that will make me think that it's a totally different thing we're looking at. I'm looking for this rebound to fail, and ideally I would want it to fail at any point below 152. Okay. Now let's have a look at the pound Aussie and the pound Kiwi. Okay, the pound Aussie yesterday almost made it to my target at 161.8. Sorry, today, not yesterday. I haven't booked that yet. I was considering of booking it yesterday near the end of the day. I did book USD CAD, but I had no reason to end up booking pound Aussie simply because it turned higher once again, right? That's why I'm usually waiting for near the end of the day closes, or anyhow until I see that volatility is over, and then more or less I have a good idea how the day is going to finish. I haven't booked it today yet still, but I'm considering of booking it if this turns as a negative candle, because we already saw some attempt from the bears to push lower yesterday. They didn't make it, but today we pushed to new highs, and if we actually close lower in the day, I think that's going to be enough evidence of some serious momentum loss. So actually I'm going to be booking finally that. So if we actually close like producing a shooting star here, I'm actually going to be booking it today, right? We are already seeing an attempt for that to happen, but as I said, it's still early on the day. I would rather wait for the end of day price action and close, or anyhow near the close to make the decision. Anyhow, I'm pretty sure I'm going to be booking this soon. I believe that we should see some pullback, and it has already been a very nice trade, so no reason to to leave some profits on the table here. So I would be careful up here, right? I mean, the 161.8, even if we make it here, I think that it should produce at least some decent pullback before resuming higher. Now, I have to assume that we're going to be resuming higher Doesn't mean that it's going to happen, but we've been creating higher lows, since last year. So I have no reason to try to pick a top here. So I'm going to be viewing any move lower as a buying opportunity initially, unless I see something very, very different than we've seen so far. Okay, let's have a look at the pound Kiwi as well. Pound Kiwi still looks to me healthy, I have to say, because oppositely from pound Aussie that actually kept pushing higher, pound Kiwi has produced what seems to be like a bull flag at the moment. So if I see a break above the 78.6 here at 195.76, I will be looking for another push to the upside towards this high. Okay, so this pattern so far, I mean, we've had 4 consecutive days of lower price action in which actually the pound Kiwi managed to move just 0.55%. And I'm saying that, why? Because in the 4 days prior to that, 1, 2, 3, 4 days prior to that, we had a movement to the upside of 2.2%. I'm trying to show you here the difference between, what happens in an impulse and what happens in a correction. So 4 days to move higher 2.2%, then 4 days lower to move down not even a quarter of that, actually a quarter of that. So do I have any reason to believe that this is the beginning of some kind of a reversal? Actually, I don't. I mean, I see a very, very, very high probability that this is a bull flag that's going to be resolved to the upside. And that's what I'm telling you here. Let's have a look now at the Euro Aussie and the Euro Kiwi. Okay, Euro Aussie actually reached, if you remember, I was asked again last weekend, a couple of days ago, I said that I'm looking for the 161.8 to be hit. It actually did. I don't have any more, concrete upside targets here. Of course, we can then be looking for this high here at 162.50. So if I have to pick a next target, it's going to be 162.50. Perhaps that's also going to prove to be no, it's higher. I would be careful here, right? I mean, I don't think there is any opportunity for somebody to be buying up here. I would be wanting to see a move lower, ideally towards 159, even 158, for another buying opportunity to emerge, because buying up here makes no sense. I mean, what is your target? Where's your risk going to be? So, is it still bullish? Yes, it is. Would I advocate that somebody should be buying here? Absolutely not. So unless you're already along the Euros, in which case, personally, I would be booking half of it here. I would definitely not be advising anybody to buy it. That doesn't mean that it doesn't remain in an uptrend, right? It does. Now, having to do with the Euro Kiwi, it has become extremely boring in the sense we said it the other day as well. It remains trapped between these channels support trend line and this horizontal area of resistance. It's also the 61.8 of the last move lower. So I have to be very honest here. Between all the crosses that we saw of the euro and the pound, if they are to roll over for a correction, obviously the Euro Kiwi remains the weakest, right? So if we see them roll over, I think that the Euro Kiwi probably will produce a nice opportunity to the downside, meaning that it might produce more downside than others, simply because while others were pushing to new highs or anyhow making a lot better, it has failed to penetrate through this area. And, there is an obvious loss of momentum. And, I cannot actually, oversee this. So, yeah, I would be very careful here. Definitely wouldn't be buying here because we're testing once again an area that has acted as successfully as resistance multiple times, and I have no reason to believe that it's not going to hold once again. So, I would be very careful with Euro Kiwi. If I had to be short any of these pairs, it would be actually Euro Kiwi. Okay. Let me see if we have any more questions. USD Swiss, absolutely. Let's have a look at it. Okay, so now the situation with USD Swiss is a little bit complicated, and I'm going to explain why. First of all, we had a rebound from the lows. There's no question about it, which got rejected from the right area, meaning this was potentially a pennant. We had this descending trend line resistance as well. So we got rejected from there, which theoretically speaking would be a nice conclusion for a corrective move higher. Now, the only thing that was missing is to break down below this horizontal area of support to actually open up the downside, right? But we actually held this area, and we're now rebounding. So now it depends. I mean, we are at a critical area once again. Is this just a retest of the broken pennant and the descending trend line? If that's the case, and we get rejected from here, and then we drop below the 0.94, 20, 30, 40 area, call it, I think it still looks great to the downside. But if we actually do break higher from here, I'm gonna stand aside. In all honesty, I'm gonna stand aside, meaning I'm not gonna be certain of what the pair wants to do here, and I'm gonna stay on the side. I mean, it's not that I have a position here at the moment, but I was looking to have a position potentially, but I'm not gonna be looking for a position anymore. I'm gonna be looking for more clarity. So
what side?
What do you mean?
What side will you be standing on? The left or the right side of the boat?
The left.
Go to the island, huh? Starboard side, port side. Which side?
Actually, the trip to Rhodes is like 16 hours, whatever. So
Oh my gosh.
Yeah, but it's okay because they're beautiful ships. We have a cabin, and it's going to be nice. I really enjoy actually traveling with.
How about your son? Does he get seasick? He gets lands, so I was.
We have no reason to believe he does. I mean, he hasn't shown any signs yet, but he's still young. So.
All right.
He has already traveled by boat several times, actually. So we never had any issue.
Can you hear the alarm clock, mommy, daddy, when the waves are crashing against the boat?
Aegean Sea actually is quite a calm sea.
Okay.
So you rarely get like big waves or whatever. So it's quite a calm sea.
I remember watching those movies. Yeah, like Troy, and it's blue and beautiful, isn't it?
It is blue and beautiful. That's true. Very blue, actually. Yeah.
Okay. Well, you'll be standing aside.
It's you have an opportunity to visit. We have a question. Do we have an interview, by the way?
Yes, and do you have my address to send the tickets? Indeed, we have an interview, Steve Olge. We have Mike Wagner today.
Okay, perfect. Let me have a look at the Nasdaq because we had a friend asking here, and once we do that, you can go ahead and start the interview if your guest is here. Yeah. So, okay, having to do with the Nasdaq. If you remember, and Dale, you can testify to that, was it late last week that I was actually showing one by one the FANG, the FANG stocks, and we were mentioning that plenty of them were not looking good at all because plenty of them were looking like they had some blow-off tops, and they were in grave danger of at least producing some strong corrections lower, because let's be honest, some of them have had such strong moves to the upside that even a 38.2 correction is, will look big on a chart, right?
Sell any rally in Facebook to 165, 175. It will be a $5 stock one day. Mark my word, March 28th, 2018.
Yeah, by the way, when we had a look at Facebook, we were still trying to break below this area. And I said that if we break below this area, then be very, very careful, because the next area of support is the trend line support of the broken channel.
I think we're going to the lows of 2013. You showed it there.
Let me see, lows of 2013. Here. I really hope you're right. We also showed NVIDIA.
We could hire Mark Zuckerberg to help Velu out after that happens.
we also showed NVIDIA, and we showed NVIDIA while it was still within this triangle. And you remember, Dale, we said that this is an ascending wedge. This was a 3-drive formation, right?
Yeah, perfect.
And it's breaking down. So where's the next area of support? Lower. This channel, this also has a channel. Bottom line, if I take you through one by one these stocks, you'll realize
the last one to follow is Amazon, I think.
Yeah, let's have a look at it. Which also had a very clear ascending wedge, right? That's what we showed.
You showed it.
So, so bottom line, I think if risk goes off, NASDAQ is by far the most dangerous place to be, because there is a lot of potential for downside moves in these stocks. They've been so overbought and so parabolic that even if they just produce some healthy corrections, it can seem like a huge downfall.
All right, well, thank you, Steve. Great call on the FANG stocks. Right. I was looking for a bearish ETF.
So, in all honesty, there is an ETF on FANGs, I think. I think there is.
Okay, Mike. It's your. I'm gonna.
Enjoy the interview, Dale.
Thank you, Steve. When are you leaving?
Sunday.
Okay.
Sunday.
Buddy. All right. I'll see you a little later at the meeting.
Indeed.
Okay, Michael Wagner. Thank you so much for taking time out of your day today, buddy. And I'm looking forward to meeting you. So I'm passing you the ball, just like who beat Duke? Villanova.
There we go. Can you hear me okay?
Yeah, I could hear you, Mike. How are you?
Good. How are you?
It's very nice to meet you, Mike. You know, you could share your screen if there's anything you wanted to show, like some instruments or your website, you know, your setup, what you look at. Okay, so here are some of the things you have to talk about. Okay, so I found Mike on Twitter, and must have been some tweet that attracted me, and I'm glad I reached out to you, Mike. And it looks like you have a new Twitter handle. You're starting to build some type of consulting business. Is that correct?
Yeah, well, long story short, and I can touch on Twitter and Facebook, because I worked for software startups for the past 20 years. My whole career has been in business development, marketing for Series A, B, C, venture-backed startups.
Okay. All right. So now you're one.
So yeah. So I started trading back when I was 15ish, and
okay, great. That's usually where I start, Mike. So go ahead. Tell us about your beginnings, how you got involved, and who influenced you, and who do you blame for introducing you to trading?
Sure. Well, that would be family. Like I said, about 15 or so, I was given a small inheritance and told, hey, this is for college. Might not be enough, so trying to teach me responsibility in the market. They kind of turned the reins over to me with the guidance. We had a lot of friends of the family who We lived about 2 hours away in Wisconsin from Chicago, but a lot of these guys traveled down to work, you know, the CBOE.
Okay, are you from Chicago?
Wisconsin.
Oh, okay, okay,
Yeah.
all
But a
right.
lot of these guys just go down for the week.
Yeah, they used to take, I knew traders from Milwaukee that would take the train in every day from Milwaukee to Chicago. Yeah, okay, go ahead.
Yeah. And so I, you know, back then, you know, you didn't have this wealth of information at a click of a finger. I got my start, handed a bunch of books by, I remember the first ones I read were Peter Lynch, you know, Fundamental Analysis. And I basically just read everything I could. Over the years, as information has become more readily available to everybody, you know, I moved and gravitated more towards technical analysis. Pretty much focused on that, unless I'm doing a stock screen for, you know, particular value plays. We're pretty much just stick to technical analysis now. You know, I've been through 2 bubbles. I definitely think we're in a, like most, well, I think a lot of people, a credit bubble right now. And so when I started feeling that about a year ago, another friend and fellow trader down in Austin, who I've known for well over a decade, Renato, we started talking, and that's where we're in the process of shifting my then consulting website, which is really just no more than just like a online business card, but moving it in towards just a free resource for more people to interact and chat who are just serious about trading. So we're in the process of doing that at WAGS Consulting.
Okay. All right. So you're talking about this credit bubble, and you have some things to show how exacerbated it was from 2008, right? Is that what?
We're just. Yeah. Well, can you see this?
Yes.
Photo here. Okay.
Yeah.
This I grabbed. It was from an article, I think, from the Wall Street Journal that crossed my Twitter feed last night at some point, and it was basically just comparing what has changed and what hasn't since 2008, which I remember very well because it, even having been through the first bubble, you know, I was caught off guard a little bit. Not initially, but it was sort of the second wave that I was more caught off guard. And I think that could happen right now, as I think Blake or you mentioned. You know, a lot of the indices and indicators are sitting at, you know, pretty significant levels. You know, I'll just bring up the SPY.
So do you trade indexes, index futures, or what are you doing in the market? What are you telling people to do?
Sure.
Just get defensive and raise cash and be more concerned about return of equity instead of return on equity?
You know, I'm usually always in the market unless there isn't a good trade setup. I don't feel the need to be making trades that often. I prefer swing trading.
Okay, can you show us your screen that you swing trade off of?
Sure.
So we kind of know what you use to compel you to take risk.
Sure. In the upper left here, I'll just focus. You know, I've been watching the minis all morning, well, since last night.
All right. Well,
you know,
I'm not. You have to show that screen. I'm just seeing you scuba diving or snorkeling right now.
Okay. 1 second.
So you stop the screen share and then you restart it on. There we go. Okay.
There. Move that over.
Okay, got it.
There we go. So here's just a 15. You know, I've just been watching the minis just consolidate sideways, basically. But it's a little tougher to see here, like a daily. But as you know, many people are talking about, we're at very critical levels here. 200, we've tapped it a few times. We have other horizontal support, and if we don't really see a reaction at this point, if we start slipping, you know, there's a good chance we could go another 10% down very quickly to, say, the 23% fib from the 09 lows.
Where does that come in?
That comes in at...
And I like these charts. What's the chart service?
This is Thinkorswim.
Okay.
From TD.
Yeah.
So this actually does run back farther, but
so it's around 2340 is 23% back?
Yeah. And, you know, and that's just the 23%. I'll pull out the weekly here. You know, this has been, you know, a historic run, really. You know,
yeah, I'd say so.
You know, we can't even come back to the 38 or even 50, given the fact that we are experiencing, you know, environment and economy, not just in the U.S., but worldwide, you know, historic amounts of leverage. You know, started in 2001-ish, you know, with quantitative easing.
Mike, I think I saw a margin debt. Is that what you're referring to? The leverage in margin debt in the stock market?
Yeah, that's one example. But
yeah, well, I'm just saying that one example of margin debt is still not at you know, what we would call, you know, what previous highs. There was, you know, there was more margin debt, I think, in 08 and 99 than there is now. But we're not that far away either. So, you know, you're talking about consumer debt right here. Yeah, I've read that most American families don't have enough saved to be okay without a month or two of income.
Yeah, and it's consumers, and it's the you know, the government banks around the world. Just that amount of credit in the system and divergence between the price of assets and real GDP is just concerning.
Okay. So credit card debt is not quite as high as it was in 08, but auto loans and student loans are astronomical. How about mortgage? Has mortgage debt recovered to the 08 levels or surpassed it? Do you know that?
I don't know.
No. Okay, no is a fine answer. You know how many people have a hard time saying, "I don't know"?
Yeah.
where I was wrong. You ever see that on Twitter? I don't know, and I was wrong. Say it. It's very cathartic.
Yeah. Well, I don't want to. You know, I don't.
I hear what? I've been wrong 1 million times. See? It's not that hard. I'm just mentoring you here, buddy. All right, so I'm trying to get the idea of, you know, your business model. Are you going to have like a newsletter or a trading room? Is it going to, what type of free service are you developing? What's your vision?
Yeah, the vision right now is a dedicated Slack channel for group members to interact with, and then Renato and I can segment that a little more between people who say just strictly trade Forex or futures or options.
What kind of channel are you talking about?
A Slack channel.
Okay, I have no idea. Can you show me what a Slack channel is?
Here. Oh, Slack. Here.
Slack. Okay. It's
Slack.
similar to like a YouTube channel?
No, it's actually a messaging thread.
Oh, I see. Okay.
Yeah. Let me pull it over here. There we go.
Okay.
So there can be a Forex. There's nothing in here right now. Futures, off-topic, options, trade ideas. It's just a message thread.
Nice.
It's a way for people to.
Are you excited about Loyola? I just saw a tweet there or something. Are you excited about Loyola being in the NCAA Final Four?
I don't think that was me.
Okay, it was someone in your channel. Anyway, so there, we just saw a picture of you, Mike. You want to scroll back a little bit? There you are.
Right there. Yeah.
Okay. Would you give this man $1 million? What do you think?
Yeah, like that. I actually used that my Twitter handle for a long time.
Yeah. Oh, really? Yeah, that's
because
Sesame Street character.
Oh, that's the Muppets. That's
oh,
Pinkert.
Muppets. Oh, see.
Yeah.
All right.
Yeah. Jim Henson. But,
so let me ask you this. Let me ask you this. I kind of have a vibe from you that, you know, we're living in some precarious times. Financial markets are vulnerable here. You know, you're covering Forex. Do you have a view on the dollar here?
Yeah, here, let me pull that one over. Now I shifted focus the last couple months, and focusing more on just the futures markets, just because they were getting a little more interesting.
Yeah.
But you know, I was watching. You know, I particularly I liked cable, Aussie, Kiwi, and Euro. Those are some of the pairs I always traded.
Okay.
Even back here in fall, I was looking for a potential, you know, here's a left shoulder, right shoulder, head, a potential break for the Dixie here. And it never came to fruition. And then once we broke that 91 handle, we just haven't been able to crack back up. And, you know, unless it can recover, let me scroll out a little here, you know, next support, this is a weekly, you know, is could be down around here.
84, yeah. A lot of people talking that.
Yeah. I think it's interesting, you know, especially given, you know, like the 10-year, you know, I was watching it last night. I actually went long a little because it was coiling, you know, popped through resistance. We'll retest this morning, but it popped up to this, you know, longer term trend line here. And even going farther and farther back, you know, if we pop through that, you know, what is that going to mean for equities like, we'll say, the S&P that we were just looking at, that are also sitting on critical support levels, you know?
So what do you think would happen? Okay, so what do you think would happen if the bonds continue to rally, yields fall? Couldn't that also be viewed as supportive of equities, because what kicked off the whole thing was a strong NFP and fear of higher rates? So now, you know, it doesn't matter, you know, because we're in a correction, you know, in a kind of a bear market, bull market correction where there's a lot of bearish stuff going on, trade wars. No matter what the reason is, it becomes bearish, because before it was bearish because yields were going up. Now it's bearish because yields might be going down.
Correct.
What do you think?
Well, and you're exactly right. Especially yesterday, we saw people moving into bonds for a flight to safety. That isn't what
it ain't like
on.
Yeah, it's not like the old days, the flight to safety, but
No.
definitely a move in there. So so you're trading futures. Now let me. You're going to have this channel. What's your goal? To have build a community, have subscribers, have a signal service. You're not just a humanitarian trying to win the Nobel Peace Prize, are you?
No. Let me pull it up here. So, yeah. So, right now it's free. We're going to keep it that way for a while.
Okay.
But, we want serious people who, just want a close-knit community to bounce ideas off of and further get ideas for hopefully years to come. So a close-knit community down the road. Between Renato and I, we have 40 years combined of trading stocks, options, Forex, futures. So we have both run into a lot of people, especially towards the end of last year. It really picked up, probably because of the crypto craze, of beginners who, they want to learn trading, which is also a little scary because it also can, from a sentiment standpoint, a social standpoint, kind of hint towards maybe the top of the market's getting a little frothy when everybody under the sun is, hey, I want to learn more about technical analysis. I've been trading 1 month cryptocurrencies. That I was flooded with inquiries of that November and December. In fact, I think that's maybe, I did a technical analysis of Bitcoin back when it first took a dive, and it got a lot of attention because I even wrote this. I did this for somebody else, somebody else's forum, cryptocurrency forum, and I just applied basic, technical analysis. I'm like, look, to me, I can kind of see a left shoulder, a right shoulder, a head. This is the neckline. You're looking for a measured move, and then I applied some Fibonacci's to it, and I said, well, you can see this is the original red. I'm like, well, I could see it coming down to the, 4,800 to 6,000 area, and we already tagged the 6,000.
Yeah.
So.
Yeah, and we got that bounce last week. That's just trying to hold it above your trend line. Well, Mike, I could tell, after having conducted many of these, I could tell when someone knows and has some skills, and you do. And you're my trading warrior brother, and I want to wish you a lot of success in the markets, and for people that are going to be part of your community, that you guys all plant good seeds and support each other in good and bad times. And really, it's been a pleasure to meet you, and I'm rooting for you.
Yeah, thank you, and thanks for reaching out.
Okay, Mike, so the best place for people to reach you is still at your Twitter account or new Twitter, or do you have a web address for WAGS Consulting you want to share?
Yep, it's wagsconsulting.com.
Okay, WAGS. Thanks so much. Great to meet you, Mike, and keep in touch. And appreciate you taking time out of the day to speak to our community.
No, it was fun. I appreciate it.
All right, buddy.
Happy trading
good
today.
Yeah, good hunting. Good hunting, Mike. That's
right.
it, face. See everyone for Thursday. I have Chris Capri at Second Skies Forex as a guest, and we're live streamed tomorrow on investing.com. Have a great day trading. See you in the other chat. Good hunting, and most of all, don't just count your pips, count your blessings. This is Dale Pinkert signing off, saying good hunting for the rest of the day, my trading warrior brothers.